So the next set of questions, we are going to talk about the concept of materiality. The concept of materiality. Because if you remember, I already explained you about materiality in vague terms. But now I will try to explain it in a detailed manner. Can somebody tell me what is the dictionary meaning of the term materiality? When I say materiality, what do I mean by that? See, when I say materiality, synonyms, if I have to write, materiality means something which is important. When I say something is material, I'm trying to say something is very important, or something is very significant, or something which is very major. So this is what general meaning of the term materiality. When I say material, I'm telling that when I say something is material, which means I'm telling something is significant, something is important, or something is major. This term material is having a lot of importance in the audit. The term materiality or the term material is going to have a lot of importance in the audit. Do you think the term material is having a lot of importance in the audit? Yes. Why? Because when we understood the first and foremost chapter, Introduction to Auditing, I have explained. While explaining Introduction to Auditing chapter, we discussed something called what are the objectives of the auditor. Why audit will be conducted, with what objectives audit will be conducted. There I told the first and foremost objective of the audit is to express an opinion whether financial statements are free from material misstatements. That is the first time when we have come across a term material. So when we discussed the first chapter, Introduction to Audit, there we understood a concept called objectives of audit. So in the objectives of the audit, the first and foremost objective I have told why audit will be conducted, with what objective audit will be conducted. The first and foremost objective which I mentioned was audit will be conducted with the objective to express an opinion whether financial statements are free from material misstatements or not. To know that, to find it out, we do the audit. So there I explain what is the meaning of material misstatement, or when do we call a misstatement as material. Guys, you tell me, when do we call a misstatement as material? I explained it, just you have to recollect. I already explained when do we call a misstatement as material. So I told that a misstatement will be called as material if it is having the ability to influence decision of users of financial statements. If the misstatement is material, if the misstatement is big enough to influence the decision of user of financial statements, because of misstatement some user is ready to change his decision, then we call that misstatement as material. So let me give you an example. Assume that I am conducting or I am one of the user of financial statements of Reliance Industries Limited. Assume I am a shareholder, I'm a prospective shareholder. I did not invest the money yet, I want to invest the money. So now I am referring to the Reliance Industries Limited financial statements. When I am reading the financial statements of Reliance Industries Limited, I came to know that in the Reliance Industries Limited a fraud has happened, and the amount of the fraud is 1 crore rupees. The turnover of the Reliance Industries Limited is 6 lakh crores is the turnover of the company. So I am one of the user of the financial statements. I was reading the financial statements. I came to know in this financial statements 1 crore rupees of fraud has happened. Why I am reading this financial statements is because I want to invest my 1 lakh rupees of my money in Reliance. See, if I want to invest 1 lakh rupees of money in Reliance, and while reading the financial statements, I came to know that 1 crore rupees of fraud has happened. Just by coming to know that 1 crore rupees of fraud has happened in Reliance, will I stop myself from investing 1 lakh rupee? No. I know it is a misstatement, but because of this misstatement, will I change my decision? When I came to know that 1 crore rupees of fraud has happened in Reliance, will I change my decision not to invest in the company? No. Why? Because in 6 lakh crores of turnover, 1 crore is nothing. It's a chiller amount. It's nothing, no. 1 crore will go in rounding off error only. So I am a user of the financial statement. I came to know there is a misstatement in the financial statements, but this misstatement is not having any impact on my decision making. Now I will say this misstatement is not material. Now assume that once again I am a shareholder. I want to invest my money in the company X Limited, whose turnover is hardly 10 crore rupees. The total turnover of the company is 10 crore rupees. While reading that financial statements, I came to know that in this company 1 crore rupees of misstatement has happened, and I want to invest my 1 lakh rupees of my money in the X Limited. Now when I came to know in this company 1 crore rupees of misstatement happened, will I stop myself from investing this 1 lakh rupees in the company? Yes. Here I will stop. Why? Because the total turnover itself is 10 crore. In that only if 1 crore of misstatement has happened, I will never invest my money in this company. So here the same 1 crore of misstatement has happened, but here it is having a influence. It is impacting the decision of user of the financial statement. Now I will say in this case 1 crore of amount is material misstatement. So we say a misstatement as material if it could influence the decision of users of the financial statements. Because of some misstatement, if the user's decision is changing, then we call it as material. But you always have to remember the term materiality is very much subjective term. The term materiality is very much subjective. We can't we can't say one materiality level will be suitable for all entities. I can't say 1 crore is material in every organization. Can I say it? Just now you have seen 1 crore is not material for Reliance Industries Limited, whereas the same 1 crore of misstatement is material for the small company X Limited. So the term materiality is a subjective term, or even I can call it as relative term. Sir, what do you mean by relative term? It depends on facts to fact. It depends on circumstance to circumstance. It depends on scenario to scenario. See, there is one interesting example which was given by Einstein to explain the concept of relativity. See, relativity is also one of the important concepts in physics. Einstein gave one good example to explain the concept of relativity. To explain what is relativity, he gave one excellent example. Assume that you are a person, you are spending 1 hour of time in the class. You are spending 1 hour of time listening to the class. This 1 hour might feel very, very long. This 1 hour will feel very, very long. If the same person is spending 1 hour of time and he is spending this time sitting with a beautiful or pretty girl or boy, whatever it is, if assume he's a boy, he's spending the same 1 hour of time with some pretty girl, then he will feel this 1 hour as very, very short period of time. Yes or no? He will feel like just like the time has flown, just like the time has flew away. Understood the concept of relativity here? See, in both the cases, the time which you have spent is 1 hour only. But in one case, you felt it as very long, but in one case, the time just like that has flown. Able to understand? This is what relativity. This is not some example which I have created. This is what the example Einstein used to explain the concept of relativity. So like this, materiality is also relative. See here, 1 crore is not relative in the case of Reliance. If the same 1 crore of misstatements is happening in this X Limited, then you will say relative. So whatever is relative in one situation, that might not be relative in another. Sorry, whatever is material in one situation, that might not be material in another situation. So materiality is a subjective term. It depends on facts. It depends on case to case. It depends on circumstance to circumstance. It depends on entity to entity. It depends on business to business. Depends on industry to industry. Clear? So we can't exactly say this amount will always be material in all the organization. We can't absolutely define it. Why? Because materiality is always a subjective term and it is always a relative term. Understood everybody? Now, sir, we understood, okay, what is material? What is material misstatement? You told misstatement is considered to be material if it could influence the decision of users of financial statements. Sir, but how to fix the materiality? So how to fix materiality? Guys, if I put it in one simple term, the materiality has to be decided on the basis of professional judgment. The auditor himself has to make use of knowledge, experience and training, and depending on the facts and circumstances of each case, auditor himself has to decide what is material, what is not material. But the standard has given you one approach. The standard has told you, SA 320 has told you an approach for deciding the materiality. Sir, whether 1 crore will be material, 2 crores will be material, 10 lakhs will be material. Sir, how to arrive at this figure, sir? How can I fix this amount of materiality? The standard is giving you approach. So what approach you have to follow in order to decide the materiality level? So what the standard says is, first you have to take some percentage. You have to take certain percentage. Take 5%, 10%, 1%, 2%, whatever it is. Sir, how to decide percentage? Once again, professional judgment. For some people, 1% could be material. For some persons, 5% could be material. For me, somewhere around 2.5% is material. So you apply your professional judgment and decide one percentage. Whatever percentage that you have decided, that you have to multiply with some benchmark. You have to determine one percentage. How to determine percentage? By using your professional judgment. And that percentage which you have decided, that must be multiplied with some benchmark. Sir, what is this? Let me try to explain in a detailed manner. So assume that in my professional judgment, I decided 5%. Now, this 5% should be multiplied on some benchmark. Sir, when I say benchmark, what is the meaning of the benchmark, sir? Benchmark could be anything. Benchmark could be turnover. Benchmark could be profit. Benchmark could be total assets. Benchmark could be net worth. Benchmark could be total expenses. So some item from the financial statements, you can take it as a benchmark. Assume that I have taken net profit as a benchmark. So net profit of my client company is 100 crore rupees. So I determined percentage on my professional judgment 5%. I decided my benchmark as profit. The profit is 100 crores. If I multiply this percentage on my benchmark, you will get a resulting figure called 5 crore rupees. 5 crores will be my materiality level. 5 crores will be my materiality level. So if I have done my audit and if I found the misstatement, and the amount of the misstatement which happened in the financial statements is 3 crore rupees only. So if the misstatement is 3 crores, which is less than the materiality level which I have decided, even though there is a misstatement, I will not modify my opinion. I will not modify. Why? Because misstatement is there, but it is not material. It is less than the materiality amount set by me. On the other hand, I have done the audit of the company. I am able to find that there is 6 crores worth of misstatement, but actual materiality level which I have decided is 5 crores only. In this case, since my actual misstatement is more than my materiality level, what I will do in this case, I will modify my opinion. In this case, I will modify my opinion. Guys, able to understand? Clear and comfortable, everybody? So what I tried to say here, how to fix the materiality, I have told. First, we have to determine one percentage. Sir, how, sir? Professional judgment. Then you have to take some benchmark. Sir, what could be benchmark, sir? It could be any item of the financial statements. It could be turnover. It could be profit. It could be total assets. It could be net worth. It could be total expense. Whatever it is, take some benchmark. Multiply that percentage with the given benchmark. You will get some figure. That figure itself, we are going to call it as materiality level. So whatever misstatements we have found it in the financial statements, we will try to compare it with the materiality level. If it is less than materiality level, we will not modify our opinion. If our misstatement found is more than the materiality amount which is set by us, then we will go ahead and give the modified opinion. Understood? So this is how you have to fix the materiality. Now, SA 320 says one more thing. SA 320 says that materiality should be decided at two levels. Materiality should be decided at two levels. Overall materiality and performance materiality. Listen carefully, guys. One more important concept. If we are done with this small concept of overall materiality, performance materiality, chapter will be over. Remaining all the questions, we can complete it just like that. So listen carefully. Only one more major concept now. The standard SA 320 says materiality should be decided at two levels. What two levels are? One is overall materiality and the other one is performance materiality. So let us try to understand now what is overall materiality, what is performance materiality. See, overall materiality means the materiality level which is decided for the financial statements as a whole. Overall materiality means the materiality level which is decided for overall financial statements as a whole. Sir, what do you mean by this? I will give you example. Assume that I am conducting audit of some client X Limited. In the X Limited, when I look at assets, the total assets of X Limited is 100 crore rupees. What will be total liabilities? That also will be 100 crore rupees. What I told is, if in my entire financial statements, if the misstatement is 5 crore rupees, I will consider it as financial statements are materially misstated. I am telling, if in entire financial statements, if the total of the misstatements is 5 crores or more, then I will consider that entire financial statements are misstated. So here I am fixing this 5 crores as material for the financial statements as a whole. I am telling, if in my entire financial statements, if the amount of misstatement is 5 crores or more, then I will consider that my entire financial statements are misstated. So this 5 crores of materiality I have fixed for the financial statements as a whole. This I call it as overall materiality. So I have decided for my entire financial statements 5 crores as materiality level. This is my overall materiality. Now, if you deep dive further, when I see the breakup of the assets, fixed assets are somewhere 30 crore rupees. In the current assets, I have different assets like inventory, I have some 10 crores. Inventory, I have some 10 crores. Similarly, I have cash balance, trade receivables, another 30 crores. Cash and cash equivalents balance 20 crores. some other loans and investments, some 10 crores. So this is what the breakup of entire assets. For the entire financial statements, I have decided materiality as 5 crores. First, I started verifying fixed assets. In the fixed assets, I found 3 crores of misstatement. In the fixed assets, I found 3 crores as misstatement. What is the materiality level I have set for the financial statements as a whole? 5 crores. Will I consider this as a material? No, I will not consider this as a material. Then I verified inventory. In the inventory, 1 crore rupees of misstatement I am able to find. What is the materiality level I have decided? 5 crores. Will I consider this as material? No. Then I verified trade receivables. In the trade receivables, 2 crores of misstatement I have found. What is the overall materiality which I have fixed? 5 crores. Will I consider this as material? No. But if you observe carefully, individually the misstatements are not material. But when you add up all the misstatements, then it will exceed my overall materiality level. But what I will do is, every time I found a misstatement in each item, I will compare that with overall materiality. So if I start looking individually, I will ignore all the misstatements and I will conclude that, okay, financial statements do not contain material misstatement. But in fact, what is happening is, individually, the misstatements could be less than overall materiality. But when I aggregate with all other misstatements, then it could be a material misstatement. But since I put the materiality at a higher level, I might miss out all these small misstatements, which could be material when aggregated. So I want to make sure that these kind of small misstatements also should be considered, which could be material when added up with other misstatements. Now what the standard will ask you to do is, you have decided for entire financial statements one materiality level. Now you try to decide materiality level for each item of financial statement separately. For example, I am telling that fixed assets are 30 crores. No, if in the fixed assets there is 2 crores worth of misstatement, then I will consider fixed assets are materially misstated. I have taken inventory. Inventory is total 10 crores. If in inventory 50 lakh rupees of misstatement is there, then I will consider inventory as misstated. I will take trade receivables. Trade receivables are 30 crore rupees. In the trade receivables, if 1 crore of misstatement is there, then I will consider trade receivables as materially misstated. So if you observe carefully the scenario here, I am deciding materiality level for each item of financial statement separately. This materiality I call it as performance materiality. This materiality I will call it as what? Performance materiality. So what the standard says is, first you set the materiality level for the financial statements as a whole. Then for each item of financial statements, you try to keep the separate performance materiality, which will be generally lower than overall materiality. Yes or no? So between overall materiality and performance materiality, which materiality should always be lower? Performance materiality should be lower. Why? Because why I am setting performance materiality? Because I want to concentrate on small misstatements also, which totaled, then it could be material. If you want to achieve that objective, performance materiality should be lower than overall materiality. So that's why if you see here, for financial statements as a whole, I set 5 crores as material. But if you see the performance materiality, in each case, the amount of performance materiality is less than the overall materiality. So like this, whenever you are conducting audit as an auditor, whenever you are deciding materiality, you should decide the materiality at 2 levels. One is overall materiality and the other one is performance materiality. When I say overall materiality means the materiality level decided for the financial statements as a whole. Performance materiality means the materiality level which I am deciding for each item of financial statement separately, which will be generally lower than the overall materiality. Understood? This is what the entire process of fixation of materiality. Guys, able to understand? Clear and comfortable, everybody? So if you are comfortable with the concept, we can read the next answer and finish it off. That's all. The next answer talks about this only, but in a much more detailed manner. Shall we have a look at the next answer, guys? See it now. So question number 14, what is materiality in audit of financial statements? Also explain how to fix the materiality in the audit of financial statements. Did I cover both? I have explained you what is the meaning of materiality. I have also covered how to fix the materiality. The same things they will try to explain here. Let us see it. Number 1, meaning. First they are talking about meaning. Materiality is an important consideration for an auditor to evaluate whether the financial statements are free from material misstatements. See, your overall objective is to make sure that financial statements are free from material misstatements. So materiality is one of the most important consideration for the auditor. Essay 320 on materiality in planning and performing of audit. Actually, Essay 320 is the standard which is talking about materiality. What is title of Essay 320? If you see the title itself says materiality in planning and performing an audit. So Essay 320 requires that an auditor should consider materiality and its relationship with the audit risk while conducting audit. So as an auditor, we should try to understand the relationship between materiality and audit risk. As an auditor, you should try to understand the relationship between materiality and audit risk. But here there is something which I have to explain. Sir, what kind of relationship will be there between audit risk and materiality? Here I will say something. But in the study material they have told something else. But whatever it is, I will try to first explain my point of view. I will try to explain what kind of relationship will be there between materiality and audit risk. What relationship will be there? Let me try to explain materiality and audit risk. See, assume that if I kept my materiality at a higher level, I told that I will bother about only those misstatements which are 100 crores. If I keep my materiality at a higher level, you tell me what will happen to my audit risk. If I keep the materiality as very high, am I taking more audit risk or am I taking less audit risk? You are actually taking more audit risk. Yes or no? If you are telling, I will consider only those misstatements which are 100 crores or more, that means you will ignore all the misstatements which are lower than 100 crores. That means you are taking more risk or less risk? You are taking more risk. So when you keep the materiality at a higher level, you are indirectly increasing your audit risk. On the other hand, if you keep the materiality at a low level, you are telling that I will get bothered about 1 crore of misstatement also. My materiality level is 1 crore, which means I will concentrate on those misstatements which are at least 1 crore. See, if you are keeping your materiality at a low level, that means you are also concentrating on small items. By concentrating on small items also, you are reducing your audit risk or not? Yes or no? Guys, if you do the comparison, when I set my materiality level as 1 crore or when I set my materiality level as 100 crores, in both the cases where my risk will be higher, when I am setting the materiality as 100 crores, there only my risk will be higher. Why? Because I am telling I will focus only on those misstatements which are 100 crores or more. If I set materiality as 1 crore, I will say I will concentrate on even 1 crores amount of misstatements also, where the risk is higher. Here the audit risk is higher. So when you are increasing the materiality level, you are actually taking more audit risk. When you are increasing the materiality level, you are taking more audit risk. So what relationship is there? Direct relationship is there. What relationship is there? Direct relationship is there. But you should not write this for examination. You should not write this for examination. This is conceptual. This is practicality. This is very good theory. Whatever I have told, whatever I have explained till now, does it all make sense to you? Yes. Whatever I have told you, that is perfectly making sense. Even I gave you examples also. No, when I am keeping my materiality at higher level, I am taking more risk. When I am keeping my materiality at a low level, I am taking low risk. So whatever logic I have told you is perfectly correct. So if you ask me, I can go and argue with anybody. There is a direct relationship between materiality and audit risk. But you can't argue in the examination. No. You can argue for practicality. You can sit for debate after your qualification. But your exam paper should not be a debate. So this is correct answer. If you ask me, practically this is correct. There is a direct relationship between materiality and audit risk. But you should not write this for exam. Don't write this for examination. So why? Because in ICAI study material, they have given one question. They have given one question for your understanding. Even I have added it here. At the end, I have added it here. If you see, this is what the question which is there in your study material. So they are telling there is a direct relationship between materiality and degree of audit risk. As per the explanation, as per the logic, whatever I have told, is this statement correct or incorrect? There is a direct relationship between materiality and audit risk. As per the logic which I have explained to you just now, is this, should the answer be correct or incorrect? The answer should have been correct, no. But ICAI told in the suggested answer, the answer, it is incorrect. They told there is an inverse relationship between materiality and audit risk. And they give some useless logic. Till now I am not able to understand how that logic is justifying that statement. But let us see what they have told. They are telling there is an inverse relationship between materiality and degree of audit risk. Oh, ICAI is saying there is an inverse relationship, not direct relationship. Then you should tell the logic also, no? See what logic they have told. The higher the materiality level, the lower the audit risk. They are telling inverse relationship, they are elaborating. If you keep the materiality at a high level, you will have low risk. Acha, what is the logic for that? They are giving example also. For example, the risk that particular account balance or class of transaction could be misstated by an extremely large amount might be very low. See, someone will come and do a big amount of fraud. The chances is very low. However, it could be misstated by extremely small amount will be very high. See, a person will come and do big fraud, all of a sudden the chances are very low. But so many small frauds will happen, for that the chances are very high. Understood? Whatever statement you have told is correct only. But how come you can link that to materiality and audit risk? Till now I don't know what to say. I don't know here. Why? Because I don't agree with this answer. I gave you perfect logic here. Why there will be a direct relationship? There is a perfect logic I am giving. But in the study material, they have given this answer. They are telling there is an inverse relationship. Why inverse relationship? They are telling a very big amount of fraud will happen. The risk is very low. But however, small frauds will happen. For that, the chances are very high. The risk is very high. Agreed. This paragraph, whatever you have told, correct only. That statement is correct only. But that statement is nowhere justifying that inverse relationship. I don't know how they have given this statement as a justification for inverse relationship, but we can't do anything in the examination. We have to write this only. We can't do anything for the examination. We have to write this only. I can't help you guys. You have to remember this only. So whatever logic I have told, you have to forget about it. So when they ask you the question, what is the relationship between materiality and audit risk as per the ICAI study material, if you want to get the 2 marks for the true or false statements, you have to write this only. What do you have to write when they ask you the question, what kind of relationship exists between materiality and degree of audit risk? You have to write inverse relationship. What logic you will write? This useless logic only you will write. This useless logic only you are supposed to write. So I can't help you out. You have to write the same answer. So as I have told, if you want to have a debate, we can have it only after our qualification. Our exam paper could not be a debate. Okay, so we will suffer. You have to remember this answer. You have to present the same answer, whatever is given here. Understood? Next. So next one, a misstatement is considered to be material if it could influence the decision making process of user of financial statements. This I've already told you when a misstatement will be considered material if it could influence the decision of user of financial statements. What could be considered material for all situations cannot be defined precisely. And an amount of transaction material in one situation may not be material in other situation. As I have told, we can't absolutely say this will be material in all the cases. Can you say it? No. Why? Because whatever is material in one situation, that might not be material in another situation. For example, 5,000 may be material for small entity, but even 1 lakh may not be material for larger entity. In certain cases, quantitative limits of materiality is specified. A few such cases are given below. See, generally, we define materiality in amounts. This much amount is material, this much percentage is material. In most of the cases, we define materiality in quantitative terms. In numbers or percentages, we define materiality. But in some cases, even qualitative aspects also could be material. Like when I say fundamental accounting assumptions are required to be followed. Checking of that fundamental accounting assumptions, is it material or not? Yes. So when I say materiality, most of the times we express materiality in terms of numbers. But sometimes even qualitative aspects are also required to be, material. See, you have to check whether financial statements are prepared as per Schedule 3 format or not. Do you think that is material or not? Assume that some company has prepared the financial statements not following the format of Schedule 3. Is that a material misstatement? Yes. So generally we determine materiality in numbers and figures. But in some cases, some qualitative aspects like accounting policies, disclosure, formats, these also will be considered as material. So in certain cases, quantitative limits means generally materiality will be expressed in numbers. A few examples are given below. A company should disclose by way of notes additional information regarding any item of income or expenditure which exceeds 1% of the revenue. Any income, any expense which exceeds 1% of the revenue, you have to show it separately in the statement of P&L. How I am telling materiality? In quantitative terms, more than 1%. In numbers, I am presenting. Or if expenditure is more than 1 lakh, show it separately. Once again, in numbers, I am saying. A company should disclose in notes to accounts shares in the company held by each shareholder holding more than 5% of the shares. If any shareholder is holding more than 5% of the shares, those details are required to given in notes to accounts. Once again, how I am telling materiality in terms of 5% numbers. But always materiality need not be expressed in numbers. Sometimes qualitative aspects also can be material. Like I have told, fundamental accounting assumption, following the format of Schedule 3, these kind of qualitative aspects also could be material. Also, materiality levels may change as and when the audit progresses. The materiality fixed at the time of planning may be different from materiality during the performance and conclusion of the audit. Like the way we are making changes to the audit plan, audit strategy, and audit program, similarly, we can also make changes to the materiality also. See, at the beginning of the audit, we will decide on materiality. There is no requirement that you have to follow the same level of materiality no matter whatever happens. Sometimes during the course of audit, some changes could take place, or you might come to know about new information, or you might come to know about more risk. In that cases, you will try to reduce or increase your materiality levels. So like the way during the course of audit, we can make changes to the audit plan, audit program, audit strategy. Similarly, we can also make changes to our materiality levels, whatever we have decided. So there is no standard which says whatever materiality level you have decided that you have to strictly follow. No standard says it. We can make changes to our materiality levels during the course of our audit. Now, how to fix the materiality? So this I have already told you how to decide materiality. The auditor shall apply appropriate percentage on selected benchmark. First, you have to select the percentage. That percentage you have to multiply to the benchmark for determining materiality level. Generally, the percentage will be applied on profit. This is one example they are saying. This is one case they are saying. Generally, the percentage applied on profit before tax benchmark will be usually higher than turnover benchmark. Like example, if you are taking 5% on net profits, you will take only 0.5% of turnover. Sir, what they are trying to say here? Simple guys. Assume that a company is having a turnover 100 crore rupees. It has made a profit of 10 crore rupees. See, generally turnover will be bigger figure. If you are taking profit as a benchmark, assume that you have taken 5%. You have taken 5% as a benchmark that you have multiplied to the profit, and you got 50 lakh rupees that you have decided it as materiality. Now, when you take turnover as a benchmark, to get the same 50 lakhs, you need not multiply with 5%. Even if you take 0.5% also, if you multiply that with 100 crores, you will get the amount of 50 lakhs only. So what they are trying to say here is percentage we have to decide on your professional judgment. But what as an auditor we try to do is when we take a turnover as a benchmark, we apply generally lower percentage than the percentage which we will apply when we take profit as a benchmark. We will generally apply a lower percentage when we take turnover as a benchmark than the percentage which we generally apply when we take profit as a benchmark. Why? Because profit is a smaller figure. See, if profit is smaller figure, take for example here, profit is 10 crores. There, if you multiply, if you take 5% and if you multiply it, 50 lakhs of materiality you will get. Turnover is a bigger figure. Turnover is 100 crore rupees. In order to get the same 50 lakhs on 100 crore rupees, you need not multiply with 5%. Even if you multiply with 0.5% also, you will get 50 lakh rupees. So what they are trying to say is, since a turnover is a bigger figure, I will select smaller percentage. Since the profit is a smaller figure when compared with the turnover, here I will apply bigger percentage. So that's what they are trying to say here. Generally, the percentage applied on profit benchmark will be usually higher than turnover benchmark. See, you can say it in other ways. The percentage which will be applied on profit benchmark will be higher than the percentage which will be applied on turnover. If I put the same sentence in other way around, what I can say is the percentage which will be applied on turnover is lower than the percentage which will be applied on the profit. Both convey the same meaning. No. What is the logic behind it? Turnover will be bigger figure. Their smaller percentage also will be enough. Their smaller percentage also will give you reasonable figure. Profit is a smaller figure. There you need to apply little bit bigger percentage to get a reasonable figure. Able to understand? So that's what they are trying to say here. Levels of materiality, as I have mentioned, two levels of materiality will be there. One is overall materiality, other one is performance materiality. Sir, what is overall materiality? Materiality which is fixed for financial statements as a whole. We also call it as pervasive level materiality. So then what is performance materiality? A specific materiality level for particular class of transactions, account balances or disclosure which is usually less than overall materiality for the financial statements as a whole. That means for every item of financial statement, if you are keeping a separate materiality level, which will be generally lower than the overall materiality, that only we call it as performance materiality. And it also includes general materiality level for all class of transactions, balances and disclosure. See, performance materiality also will be of two types. You can fix performance materiality in two ways. See, assume that there are fixed assets. One way which I can fix the performance materiality is I can say for all fixed assets, I will keep one materiality level. That I call it as general performance materiality. Some other auditors, what they do, fixed assets also they will open. They will see land and buildings, certain amount is there. Plant and machinery, certain amount is there. Electrical fittings and equipments, some amount is there. Furniture and fittings, some another amount is there. Even you can go and fix the materiality at sub level also. So you can fix the materiality at each item separately. That is performance materiality. Or either you can fix the materiality level for one category of items. That we call it as general performance materiality. Let me give you one more example. See, there are various expenses. When I say expenses, under the expenses, so many things are there. Salary expense is there, rental expense is there, power and fuel expenses is there. Like that, so many expenses are there. One thing what you can do is for each kind of expense, you can fix a materiality level. Like for salary, I told for salary I have kept for salary 1 crore will be material. For rent 0.5 crore will be material. For power 2 crores will be material. This is a performance materiality. One more thing what I can do is I can keep the materiality level for only expenses. I will say in the entire expenses, if 3 crores of misstatement is there, then I will consider expenses are misstated. This is also performance materiality only, but we call it as general performance materiality. This is performance materiality. If you keep it for one category of item, then we call it as general performance materiality. When you are keeping for the financial statements as a whole, overall materiality. When you are keeping at each item of financial statement separately, then it is performance materiality. In the performance materiality also two categories, performance materiality, general performance materiality. Clear? Next one. Sir, you are telling any item of financial statements can be taken as benchmark. You are telling that turnover also can be benchmark, profit also can be benchmark. First, I will read examples. Fourth point, I will read various examples of benchmark. Sir, on what I can multiply the percentage? Sir, profit before tax, profit could be a benchmark. Turnover could be a benchmark. Gross profit could be a benchmark. Total expenses could be a benchmark. Net worth or net asset value can also be a benchmark. Now, a doubt you will get, sir, when you are telling any of this could be a benchmark, how auditor will decide one, sir? You are telling profit also could be benchmark. Turnover also could be benchmark. Gross profit also could be benchmark. How auditor will decide on one particular benchmark, sir? How auditor will decide is he will consider various factors, then he will decide which benchmark will be suitable. But once again, I will say professional judgment. Summary is professional judgment. But while applying that professional judgment, you will try to keep certain factors in mind. So what factors auditor will try to keep in mind in identifying benchmarks that they are trying to say it in the third point. So these many options are there. No, how do I choose one? You choose one after considering these factors. What are they? Let us see. The following are various factors for determining benchmarks. Number one, the elements of assets, liabilities, incomes and expenses. See, any item you can take it as benchmark. From assets you can select benchmark. From liabilities you can select benchmark. From incomes you can select benchmark. From expenses also you can select the benchmark. Sometimes there will be an indication in the applicable financial reporting framework only. How come, sir? Like if you read schedule 1, assume they are saying every item which is more than 0.5% of the turnover or 1 lakh, whichever is higher, shall be stated separately. That means schedule 3 is indirectly giving you a hint that turnover can be used as a benchmark. Schedule 3 is indirectly giving you a hint that when the schedule 3 is saying every item which is more than 0.5% of the turnover, show it separately. That means schedule 3 is indirectly giving you a hint that turnover can be used as benchmark. So like this, sometimes there will be an indication in applicable financial reporting framework. Next one, it depends on entity's capital structure, ownership structure. For example, it also depends on how entity is financed. Assume that if the company is a completely debt oriented company, that means they are heavily debt based company, they are having lot of debt than equity, then I will try to take fixed assets as a benchmark. Why? Because when the company is taking more debt, always people will be interested to know how many fixed assets they are having. Why? Because if they have taken debt, if they have taken long-term borrowings, they should invest it properly in the fixed assets. So in that case, if the company is heavily debt owned, then I will take fixed assets as a benchmark. Why? Because people will be interested to know about fixed assets in the case of debt oriented company. So like this, sometimes which benchmark I have to choose, that depends on capital structure also. And it also depends on information needs of majority of users in the industry. If you take FMCG company, the people in the industry are more interested to know about turnover. In case of FMCG companies, the researchers or industry users, they want to know turnover than profit. In case of IT companies, people will not concentrate on turnover. People want to know profits. So the users of FMCG industry are needing turnover. The users of IT industry, they want to know profit. Even I can use this information also for selecting benchmark. If I'm conducting audit of FMCG company, since industry people are using this information more frequently, I will use turnover as a benchmark. If I'm conducting audit of IT company, since industry users want to know about profit, then I will take profit as a benchmark. So it depends on even information needs of majority of users also. Sometimes the applicable law or regulation itself will say what is material, what is not material. Take for example, Income Tax Act. 40A3 payments will be there, which says if you make a payment of more than 10,000 in cash, they will be disallowed. Now you tell me, for verifying cash payments, what is materiality level? 10,000. Why 10,000? Why? Because law or regulation says here more than 10,000 we will disallow. So like this, sometimes what is material, what is not material, that will be there in the applicable law and regulation itself. So if they ask you the question, what factors you will consider in identifying benchmark? Five kinds of factors you have to consider. See, first point is not actually a factor, it is just a statement. First point is not actually a factor, it is just a statement. They say that any item of the financial statement can be selected as benchmark. From second point, they start saying factors. What are they? Sometimes applicable financial reporting framework will say it depends on capital structure, it depends on needs of users of the industry. Sometimes applicable law or regulation itself will say what is material, what is not material. So all these factors auditor will keep in mind, then he will decide which benchmark to choose. But I will say by the end of the day, always auditor will use professional judgment. That means he should use his knowledge, experience and training, then decide what is material, what is not material. Okay, so we have seen what are examples of benchmark, what factors you will consider, but from where you will select the benchmark. Assume that after considering all the factors, you have decided turnover will be your benchmark. Now, from where you will take this turnover figure? See, any of this can be used as benchmark. You have decided these factors, you considered these factors, and finally you have decided you want to use turnover as a benchmark. From where you will take turnover figure? See, if the current year's financial statements are already ready, I will not look for any other sources. From the current financial statements, I will take the turnover. In case while I am doing audit, current year's financial statements are not ready, then I will look for other sources. What other sources? I can take the turnover from previous period's financial statements. I can take the turnover from quarterly financial statements. I can even take the turnover from budgets also. Guys, when I start looking for other sources when current year's financial statements are not ready. When I am doing audit, if current year financial statements are already ready, I will take the benchmark from current year's financial statements only. In some cases, because of some reason, while I am doing audit, if the current year financial statements are not ready, then I will select the benchmark from other sources like prior period financial statements, quarterly results, or even budgets also. So these are all the various sources for selection of appropriate benchmarks. That's what they say here. First, current year's financial statements. If they're not available, then I can take the figures from prior period financial statements also, latest quarterly financial statements also, or even I can take it from budgets also. Clear? So what I have explained in this question, I told you first what is the meaning of materiality. Then I told you how to fix the materiality. At how many levels you have to fix the materiality, and what are the various examples of benchmark which can be used. What factors you will consider in deciding an appropriate benchmark, from which source you will select the benchmark. That's it. Answer is over. Do you think they will ask you the entire question? No, a part of the question will be tested. For that only I have test your knowledge questions, like if you have a look at it. Determining materiality involves exercise of professional judgment. Okay. Discuss stating the factors that may affect the identification of appropriate benchmark. Explain with examples. So nothing but they are asking you this part of the question, what factors you will consider in selection of benchmark. So this part you have to write here in the answer. Next one. You are being appointed as auditor of Track Limited for the first time. You want to determine materiality level, and for that you have applied percentage to choose a benchmark as a starting point in determining materiality for the financial statements. Okay, all these things they have told. Now what is the question? What are the factors that will affect the identification of appropriate benchmark? What factors you will try to keep in mind for selecting an appropriate benchmark? Once again, same question. These factors you are supposed to write here as a answer. So hope you guys are able to understand. So this is what regarding materiality and how to fix the materiality. So we are actually left with three more questions. That three more questions we'll try to complete in our next class. Okay, so that's all for today, guys. See you in the next class. Bye everybody, take care.